If you're a sole trader who registered for GST to look professional, this one's for you. Adding 10% to your prices when your customers can't claim it back isn't making you look legit. It's quietly handing the tax office around $5,000 of your take-home pay every single year. Hundreds of thousands of Australian micro businesses register for GST they never legally needed. And it comes down to one tick box that triggers three things at once: charging GST, lodging activity statements, and absorbing a cost most never recover. Today we'll check, quantify, and protect 3 moves to stop the bleed. Here's the number that matters: $75,000. That's the GST turnover threshold, and according to the ATO, registration is only compulsory once you cross it, with 21 days to register from that point. But here's the part nobody tells you. Below that line, registering is entirely optional, and often it's costing you. So 3 moves. First, check whether you even need to be registered. Second, quantify your GST drag and decide. Third, set up a monthly threshold check so you never get caught out. Each takes under 20 minutes, and they're all free. Here's the mechanism. The ATO and businessgov.au both confirm GST registration is optional below $75,000 unless you're in a mandated category like rideshare. But once you register, you must charge 10% GST and remit it. If your clients are consumers or other small operators who aren't registered, they can't claim that 10% back, so it's a straight price increase that lands on you. Take a service sole trader on $60,000 a year. Charge that as GST inclusive, and 1/11, $5,454, goes to the ATO. Stripe GST guidance. With only $10,000 in GST-bearing expenses, you claw back just $909 in credits. Net cost $4,545 of cash gone, versus $0 if you'd stayed unregistered. Now the second trap, and it's nastier. GST turnover isn't your profit, it's your gross income over a rolling 12 months, current month plus the previous 11 ATO. Most owners track cash in the bank, not that rolling figure, so they tip over $75,000 without noticing. And the ATO can backdate your registration up to 4 years, assessing GST on past sales plus penalties and interest. Stripe ATO. Say you earned $90,000 over the year with mostly consumer clients. If registration is backdated, the ATO treats that as GST inclusive, GST component around $8,182. Stripe. After $15,000 in expense credits, you're still net about $6,800 owing. And because you never charge your clients GST, you fund that entirely from your own pocket. The myth: register for GST straight away so clients take you seriously. People believe an ABN with GST just looks more legitimate. But the ATO is clear. Below $75,000, registration is voluntary. Believing the myth can cost a micro business around $5,000 a year for nothing. So look at both costs side by side. Early voluntary registration drags around $5,900 a year. ATO Stripe modelling. One late registration backdating event can run to $8,000 with penalties. ATO. Over 10 years for one designer, that combines to roughly $67,000. And that's the part that really stings. Meet Sarah. She's 34, a freelance graphic designer in Melbourne, turning over $65,000 a year, mostly to consumers and micro businesses. She registered for GST from day one to look professional, and she's never once monitored the $75,000 threshold. Here's what Sarah found. Discovery 1. $5,900 a year, gone. Sarah learns from the ATO and business.gov.au she was never required to register until $75,000. On her $65,000 turnover, she remits $6,500 and claws back only $1,091. Stripe. With admin and software, that's roughly $5,900 a year, nearly $30,000 over 5 years. Discovery 2 hits a different layer. Sarah has never calculated GST turnover the ATO way, current month plus the previous 11, ATO. In a strong year, she pushes to $80,000 without noticing she crossed the line months earlier. A 6-month backdate on $40,000 of sales is about $3,090 net. And with penalties, it tips over $4,000, more than a month's take-home pay. Discovery 3 is the most unexpected. The penalty risk is real. The ATO can backdate registration up to 4 years and charge penalties and interest. Stripe ATO. Practitioners report small businesses facing up to $1,600 per late activity statement when periods stack up. 2 missed BAS at $400 penalty plus $100 interest each is $1,000. Gone. Put it all together over a 10-year horizon. 9 years of roughly $5,900 of early registration drag, plus one backdating event in a breakout year of around $8,300. That's $67,318 in lost or clawed back cash, ATO Stripe modelling. Money she could have kept as business savings or personal wealth. So could this be you? Sign 1, you registered for GST to look professional while still under $75,000. Sign 2, you don't actually know your rolling 12-month GST turnover right now. Sign 3, you've never worked out your net GST outflow per quarter. If any of those ring true, the next 3 moves are exactly for you. 3 moves, let's do them. Check your status, quantify the drag, then guard the threshold, all free through the ATO. Move 1. Check whether you even need to be registered. Log into ATO online services through MyGov and confirm whether GST is currently active on your ABN. Then pull your last 12 months of gross income, excluding GST, from your accounting software or bank feeds and compare it to $75,000. This is general information, not personal advice. 3 steps. Log into MyGov, go to the ATO, and check if GST is active on your ABN. Pull 12 months of gross income excluding GST. Compare your turnover to $75,000. What good looks like? If you're under and not in a mandated category, unregistered is a valid, legal, often cash superior position. Move 2. Quantify your GST drag and decide. Open your last 4 activity statements in ATO online services and note GST on sales and GST credits claimed. The gap between them, minus your bookkeeping and software costs, is what registration really cost you. If you're under the threshold and consistently out of pocket, you can apply to cancel. 3 steps. From your last 4 BAS, note GST on sales and GST credits. Net outflow equals sales GST minus credits over the year. Add your admin and software costs for the true figure. What good looks like. If the outflow is large and you're under $75,000, cancelling can lift your income by thousands while staying compliant. Move 3. Set up a monthly threshold check so you're never caught backdated. Using the ATO's working out your GST turnover guidance, build a rolling 12-month report in your accounting software or a simple spreadsheet. The whole point is to know your turnover the ATO way every month before the line creeps up on you. 3 steps. Build a rolling 12-month gross income report, excluding GST. Updated on the same date every month, summing the current month plus the previous 11. Set an alert at 70,000, and if you cross 75, register within 21 days using ATO online or by calling 132866. What good looks like. No surprises, ever. Why now? None of this is theoretical. The $75,000 threshold is current law with registration compulsory above it, ATO. The 21-day window to register once you cross is already in force, ATO. And the 4-year backdating power is one the ATO uses, Stripe ATO. These rules are live today. The only question is whether you're tracking your turnover. After you act, verify it worked. You should see your correct GST status reflected in ATO online services. Confirm your rolling 12-month turnover report actually updates each month. And if you cancelled, check that your final activity statement lodges and clears cleanly. Everything here comes from the ATO business.gov.au Stripes GST guidance and practitioner commentary. All the links are below so you can check your own situation. So now you know the GST registration threshold, how voluntary registration quietly drains your income, and how to protect yourself. Next week, the ABN and tax mistakes quietly draining sole traders. If this saved you a $5,000 mistake, subscribe. We read the fine print so you keep your money. One tap, and we'll see you in the next one.